Dow Jones posted its largest monthly gain since 1987. Holy moly macaroni. You're watching the Daily Stock Market Brief. My name is Michael Silva. Today's date is 11/30/2020. I do these videos 5 days a week. So make sure to subscribe and smash that like button. It helps my channel grow. And I appreciate all the kind words that have been flooding into my channel. It's been a few days since my last market brief. Had a little bit of a, Thanksgiving vacation. Let's go ahead and get into today's show. We got a lot to talk about. All right, welcome back. Now, before I just hop into the charts, I want to let you know that I have timestamps in the description and I have them pinned on a comment as well. So if you want to go to certain indices or you want to just go to the indicators, whatever it may be, you can kind of hop around to listen to what I have to say as I walk through all the charts. Today I'm going to be putting some big focus on the Dow Jones. Then we're going to be walking through all of that stuff. Let's go right into the Dow Jones now that I'm saying that. Let's look at the monthly time frame. Look at the month came to a close, up 11.84%. Largest monthly gain, like I said, since 1987. Crazy, right? We came up here to the upper Bollinger Band. Last time it did that was back right here in February before we saw that big down pull. Just a big, large green candle, a lot of strength hopping into the Dow Jones Index. This is the Dow Jones Industrial Average. Okay, keep that in mind. This is not the Dow Jones Composite, which I'll be going over here shortly. Here is the Dow Jones Industrial Index on the daily time frame. What I want to point out here is today we saw a down day, okay, but it wasn't that aggressive, okay? This is the end of month, November 30th, so we're probably having some rebalances taking place here. Now on the seasonality chart, as I went over on my last market brief, we saw a big steep decline into December. I don't necessarily know if that's going to be following through. We have tomorrow, we have the Powell coming out to talk, I think, tomorrow, or he had a speech drop tomorrow, or today it dropped, and then also on Wednesday as well. Look at what took place here. We came down, touched this lower trend line, filled this gap right here. This was a white gap. We came down and filled it. Showed some strength at the trend line. Maybe we might start breaking down. Now, what I want to point out here is the bears took control of the 5-period moving average, but it's not like significantly down there by any means. The last time it did that was just a few trading days ago, really, and it immediately came ramping up shortly thereafter. So you never know. We might just start continuing to ramp up these next couple of days. Yeah, but then we could have a good possibly 2 weeks there. We don't have much information or how much news coming out where we can really see some sort of a downdraft to potentially take place. But we'll see. Here on the 2-hour time frame, I want to point out a ascending triangle. This is a bullish pattern in bullish context. Came down, filled this white gap. This trend line right here, I just want to kind of draw in on the 2-hour. There's going to be some resistance up ahead, and then we have resistance, the horizontal portion. We did a breakout, okay, but then we kind of pulled right back in. We hit this lower trend line, as you can see here, kind of zoomed in. We saw it on the daily, and now we're seeing it on the 2-hour. Now I want to show you something that I posted up on Twitter. This is probably confusing to look at. You're probably like, what the hell is going on here? But what I want to point out here is this side right here to the left. This is 2020. And right here to the right is 1987, okay? The 80s. And what we got going on here, this is daily time frame on the left, weekly on the right. So it's not exactly the same, okay? But, it's very similar looking. The top chart here is the DJA. This is the Dow Jones Composite. The Dow Jones Composite consist of this transport index, this utilities index, and then the industrials index. These are supposed to move in unison with each other, and not like if they diverge for a couple of days, it's not really a big deal, but when they diverge for multiple weeks or potentially even longer, you really have to take note. And what I wanted to point out here was, we have an ascending triangle, ascending triangle, ascending triangle, but what I find interesting is that the utilities was forming this bear flag that we kind of just broke underneath, and you kind of saw, the rising wedge break down. I'm not going to hold too much weight on that as of right this particular moment, but that could potentially be the start of more of a downdraft and then potentially move higher, but we'll get into a chart here soon. But what I wanted to point out here is utilities. Here in 2020, we broke the bear flag. Here on the weekly time frame utilities, you can see that there was very similar patterns, bear flag, and you can see that here The red line, this is kind of where we got extended from the over Bollinger Bands in 2020. Very similar thing happened in the 80s right here, as you can see. And then the industries, the transports, the Dow Jones Composite, and the industrials all continue to move up while utilities started to drag lower. Sometimes when they diverge like this for multiple weeks, like I said, and they're not keeping up, or the Dow Jones continues to move higher, or the industrials continue to reach new highs, that right there is a divergence when they should be all moving together. And we need to take note of that, because if it continues to fall like the utilities did here, it's very possible that we see the other indexes fall too as well. So we got to take very close precaution just by watching what's taking place here in utilities. Now, I could go much more into detail on all of that. I'm not going to at this particular point in time. I want to point out something else, because we're talking about 1987, right? It's like deja vu. This is the weekly time frame. This is 2020, okay? Negative divergence. Notice how this big crash took place, and then we just ramped right up. This is monetary policy at its finest, just print, burr, 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 whatever they want to say. And what I want to call out right here is when it got back up to the all-time high, we saw some resistance, right? It reached up to its upper Bollinger Band here on the weekly time frame, got rejected once, got rejected twice, and then we blew off to make an all-time high. That was the third time. Look at 1987. Now, this is a longer period, but what's so interesting is just at the points of interest where it's at. Okay, this was the all-time high here in the 87. Then we saw the 1987 stock market crash, which was just gigantic. This is the weekly time frame, so it took much longer to get back. Why would it take so much longer to get back? Well, they didn't have the bazookas of monetary policy that we have today being used. So we have just a much more dramatic move to the upside now, but very similar type crash to the downside. Now, like I said, when it reached an all-time high, it got rejected once on the upper Bollinger Band, got rejected twice, and then we saw a blow off top. Okay, and then we saw the pull down. So both negative divergence on the RSI and obviously the stochastics here. So very, very similar. Let's hop back. Okay, up once, rejected, up twice, rejected, blow off top. Up once, rejected, up twice, rejected, blow off top. Now, just so you know, we saw the big down pull, and then it continued to ramp up and actually make all-time highs, obviously. But what I want to point out is, first off, we're basically right where we are right now. So you can see at the upper Bollinger Bands here on this kind of blow off top, and then right here at the upper Bollinger Bands on this big ramp up to the upside. This was actually held by a big gap up. So this is very interesting price action right there. And a big difference between this move up and this move up is there was a lot more gaps, obviously, to get up here that pushed the market up. And you can see that there wasn't really any quite back then. So, we're being propelled forward by just a lot of gaps pushing us higher and higher. Now, this doesn't mean that we're going to see a pullback like this, but if it plays out similar, hey, you never know. We might break down below this low right here, and then we might pull back a little bit further, maybe potentially into 25,000, and then rally a lot higher. So it's something to watch and something to just kind of keep an eye on. Doesn't necessarily mean, like I said, it's going to happen. We could very well blow off even higher and then see a pullback. So we got to keep that in the back of our pocket as well. Stochastic here is in that overbought territory, and I want to say over here too, stochastics overbought with a negative divergence. Okay, let's go into the S&P 500. S&P 500 on the monthly time frame closed above the upper Bollinger Bands. Now a new month is coming, right? Starting tomorrow. That means the Bollinger Band is going to be updated. It's going to move a little bit higher, so we got to take note of that. This is a very strong month, obviously up 10.75% for the month. Above the upper Bollinger Band is pretty extended in my opinion. Maybe we might get a retrace to the 5 EMA on the monthly and then continue to move higher. But we'll get into some daily time frames here shortly so you can kind of see, or even the 2 hour, what can potentially take place here in the next few days. Here on the weekly time frame, we have that still megaphone type looking pattern. The upper trend line, the red trend line right here is still being respected as an area of resistance so far. We have a weird start to the week so far, just down 0.46%. Honestly, it'll probably gap above all of this tomorrow by the looks of the futures market right now. So we'll see. In order for the bears to really capture control of this, and they got to get below the 5 EMA on the weekly and also the daily. Speaking of the daily, let's look at the daily. This was interesting, okay? Big down day. Got rejected right up in this area, kind of 3650, let's call it. 3650 is a pretty big level of resistance. sometimes when we have resistance like this in the cash markets, what happens is we just gap over it very soon in the aftermarket sessions. Now, what I find interesting here is we came jamming down to this previous high in September, and then we bounced from that level and closed back above the 5 EMA. So it's kind of jammed up into that area. So the bulls still captured control. So the bears tried, but they just did not succeed. Here on the 2-hour time frame, I just want to point out this blue channel that we're kind of trading within. But then I also drew out an ascending triangle trend line right here because it is being respected currently, and that's a bullish pattern in bullish context. So we got to, we very well may break out of this, potentially just gap through it and then really ramp up higher for another kind of just another ramp up. Now, keep in mind we have a negative divergence on the RSI and on the MACD itself. So also comes with caution. Can't trust all these breakouts. So when we see breakouts right now, you got to be very careful with them because they could just very well be tricking more people or pulling people in on a breakout, and then potentially it reverses. And reverses in these overextended areas can be very, very dramatic very, very quickly. Let's look at the Russell 2000. Russell 2000, 18% up for the month. Insane. Above the monthly Bollinger Band. Monthly Bollinger Band will move higher. We broke through this area of resistance. Now, that's a solid breakout in my opinion. Maybe we might come back test it and come back to reality a little bit to about 170. So my plan is I entered in right up, pretty much right at the top on a short position, maybe a few dollars less. And if it starts pulling back into this area or even continues to move higher, I have a long-term hold on this going into next year. So I'm not too worried about it. But a big overextended move like this, it's likely to see some sort of consolidation and then move higher, or just like a rubber band stretches out, we can see it snap back. My target would be probably around 170, and then maybe I'd scale out of that position, and then it could go potentially long from there. But you got to be very careful. I'm not probably going to be using the Russell 2000 as a long, buying in long. I'll probably be looking at the Nasdaq 100, and I'll probably be going long at certain gap fills with that. So yeah, IWM, Russell 2000 showing a lot of strength in small caps, all-time record high. For the month we closed at an all-time record high. Clearly it went higher at 185, but still very, very impressive. Here is it on the weekly time frame. It's in a nice up channel. Okay, came back within the upper Bollinger Band, still pretty overextended from the 5 EMA. Wouldn't be surprised to get a reconnect there. The bears need to take control of the 5 EMA to really see downwards movement. So if we start pulling back in this area, here's that 170 kind of marker right there. We have a gap right below us. We might find some support there, as well as this lower trend line. So we got a lot of support. The bears have a lot of work to do in order to take over this chart. So keep that in mind. It's in bullish context. It's pretty overextended. So if you're a long-term investor and you want to buy a dip, you'd be wanting to look at dips more down in this range or potentially reconnects to the 5 EMA. On the daily time frame, rising wedge broke down. The bears captured the 5 EMA on the daily time frame. It hasn't done that for a very, very long time. So take note, RSI was really frothy over here, and sometimes when it gets frothy, we see pullbacks. You got a negative divergence on the stochastics. Maybe this might continue, but like I said, we might find some support in certain areas. We had that 170 kind of area on the, there we go. Sorry about that. We had that 170 mapped out on the weekly time frame, but we also have some support right around this area. So I don't know why it's red. It should be green, but we got to get below that, and then we could probably see some more downwards pressure. You see the 20-period moving average kind of sloping up pretty steep there too. So the longer the price action stays above the 20-period moving average, which is in the middle of the Bollinger Band right here, that can also act as a level of support. So we got to, keep an eye on that. Here we are on the 2-hour time frame. This is the same thing, zoomed in a little bit. You can see this white box right there. That was a gap that was filled in, and we closed below it. So, this looks like a solid breakdown so far, but like I said, there's still a lot of support beneath us, so we need to make sure that we're paying attention to that. And like I said, it's the last day of the month, right? November 30th, a lot of rebalancing taking place. It's okay to see some selling going on. That doesn't mean we're going to crash right away. So we got to, respect what's currently going on in the markets. Let's look at the Nasdaq 100. Nasdaq 100, another crazy month, right? Just jammed up 11%. Upper Bollinger Band, that's an extended move when it gets to these levels. Sometimes we see pullbacks. Sometimes it gets overextended more. Next month starts, this Bollinger Band's going to move up. On the weekly time frame, this was, I'll talk more about this candle right here on the daily time frame because that's only 1 day of price action, but we're still above the 5 EMA, still close to the upper Bollinger Band. Maybe not the best place to go long right now, especially when we have this kind of all-time high that we're trying to get back and test. So not only this all-time high right here, it's also kind of lined up at 12,500 with the upper Bollinger Bands. It's going to take a lot for the bulls to continue to push through that. Maybe they just might gap and go. Like I said, we gotta be very patient here with what's going on. I tell you one thing. One, we're in a bubble, right? Markets don't actually act like this. The global market cap is like just out of this world. The total market cap over GDP is like 179% or 172.9%. It's just extraordinary, like just massive bubble. And we got to be very careful because euphoria is really heightening right now. I can see it in comments. I can see it in the media. I can see it everywhere. Everyone is fully convinced that the stock market is the safest place to put your money and park your money, and they only go up. So when everyone moves in like that, you gotta just play with caution. Here it is on the daily time frame. Very interesting candle. Okay, first off, we had a shooting star candle last trading day, and then we had this candle, which is also something of like I don't know what you want to call that. Maybe even potentially a hanging man, or a doji gravestone. I don't know what you want to call this. But let's talk about the psychology of today's candle. It showed a lot of weakness today. So it opened up and it showed a lot of weakness throughout the day, going down about 200 points. Found support at the 5 EMA, which is still being respected by the bulls. Pushed all the way back up. So it filled that gap, pushed all the way back up and closed basically, 0.8% up for the day. So pretty insane move, but sometimes this could be topping type patterns. Where are we going to open tomorrow? I'm not too sure, but this gap right here might just get hyped right over. Yeah, it's very possible that we just gap and go. So we'll see, but there'll probably be some resistance up in this area. And if they don't want to test that in the cash markets, when the market's open, sometimes the aftermarket sessions just push us right through it. Here's the Nasdaq 100 on the 2-hour time frame. I want to just point out ascending triangle. Like I said, this could be potentially a bull flag. Boom, consolidated sideways. Now could be very well in the area where we get this gap over it and then push higher. Like I said, though, you got to be very careful on breakouts when we're so overextended in areas like this. And this is going to make a lot more sense when we start going over the indicators. Negative divergence there on the RSI too. Keep that in mind. Here is the semiconductors. Now, I already went over the transports on the Dow Jones. Here's the semis. Semis had a shooting star candle last week, and now today it's also a very similar type kind of hanging man candle where you have a long lower wick and a short upper body. RSI is getting pretty frothy, still negative divergence, rising wedge pattern. Maybe this might go higher and push higher, but be very careful in these areas because the risk to the upside is quite large rather than to the downside, if I said that right. So basically what I'm saying is if you go in long right here, the reward for going long right here is very small comparatively to the risk. That's what I meant to say. Let's look at the banks very quickly. We called out this rising wedge pattern. Pretty solid breakdown through this, okay? A pretty bearish red candle, just solid breakdown, down 4.2%. This is the KBW banking index. This is regional banks, so the mom and pop shops. Pulling into the 20-period moving average, we might find some support, or we might just go completely just back test this market. We don't know yet, but keep in mind it's pulling back into the 20-period, which if you look to the left, that's right around some previous areas of resistance. Once resistance is broken, then could become some support. So let's keep a close eye. Here it is. This is the KBW Bank Index, the BKX. This is, the largest institutions in the United States. The monthly up 17.43% for financials. This is, like I said, monthly time frame. This is still within potentially head and shoulders pattern. And if we break below 55, it could be devastation in the equities markets. But as I see it right now, we closed above a pretty strong area, showed some weakness, in the last trading day or whatever. It's not that big of a deal. If we start breaking below this trend line, maybe we might test this area again. But as I see it, this is looking somewhat strong at this particular point in time. You can potentially call this a rising wedge here, and then maybe we got to keep an eye on this black trend line to potentially see it break down. So just something to take note of, nothing crazy. Let's go over the indicators. Okay, we got indicators and or signal charts. What is What is the breadth of the market telling us? What is the sentiment of the market telling us right now? First off, this is the Pring bottom fisher. Okay, the Pring bottom fisher is good at finding market bottoms. Okay, I like using it for finding market bottoms. But what I want to point out, sometimes when they cross back over, and if you don't know what this is, let me just go over it really quickly. This is the blue line is the Pring bottom fisher indicator, and then the green line is the moving average, the 10-period moving average. So sometimes when you see them cross in certain ways, that's to signal a bottom. So when it's at the bottom here, the blue crosses above the green. When at least is below the black line, that's typically signaling a market bottom. So right here in October, you saw the blue cross above the green. That was right here at the neckline of this little mini head and shoulders pattern, and we saw it squeeze up to the upside. Okay, we saw a cross right here, and then what you see is, boom, burst up to the upside. Now, what I want to point out is just sometimes when it crosses below, we see some downwards pressure. Now, that's not always the case, okay? But the last time it crossed below, you can see right here, if you just from here to here, we saw that downwards pressure, and we're about to cross below right now. So we'll keep an eye on this, see what takes place. This doesn't mean that it could cross and head really, really low, but it's something to just note. Here is the warning signal indicator or the sell signal indicator. This is telling us the put to call ratio. This is the CPC. This is the total put to call ratio. This is sentiment of the market. Sentiment of the market on smooth over 10-period moving average is quite bullish at this particular point in time. When it crosses below the red line, that's the warning sign. Things could get a little dicey, but when it crosses above the red line, that's the sell signal. And by sell signal, I don't mean go buy hella put options or anything like that. It doesn't mean, get rid of everything. It basically means make sure you're taking some profits, move your stop losses up, because the market still can ramp higher, but there's a possibility that we might start seeing it reverse. Okay, sentiment of the market is showing too bullish, and now it's time to shift to a more bearish point of view. So you can see it cross over here, boom, we saw it move to the downside, crossed over here, boom, we saw it move to the downside, crossed over here, boom, kind of sideways to a little bit down, cross below and then cross back above, boom, to the downside, and then right here crossed above, and you can see it move down and then kind of sideways right there as well. So pretty accurate so far. Here's the night high low. Okay, this is just jammed up to 97.74. Sometimes when it reaches these levels, you can see the blue vertical lines. We see pullbacks in the market. So this is a very high frothy number. What is that signaling to us? Well, it's signaling to me that, hey, things are way too frothy. And what did we see happen at the NYSE today? Well, the NYSE, which I didn't go over that index, we had a pretty significant down day, and it was a very bearish looking candle. That's something to take note of, because we had a lot of gaps pushing us higher, and then now we're starting to see some weakness take place in the NYSE. Okay, here's the NYMO. NYMO is overextended on the upside. Okay, so right here at this red horizontal line, sometimes when it gets to those areas, we can see pullback, so it's overextended. You had a double top, but you also see somewhat of a negative divergence taking place. You have a lower high here and a higher high there, and then you have a lower high here and a higher high here. That's a negative divergence. We're starting to see the breadth die off a little bit, 1105. Maybe we might start seeing a negative breadth here and potentially even a spike down as a negative breadth. So we got to make sure we're paying attention there. Here is the percent of stocks above the 200-period moving average and the 50-period moving average. Another indicator that we can see when there's overextended moves in the market, or the breadth of the market is just very significant right now. When we get at 90.18, that's saying 90% of the stocks are above the 200-period moving average in the S&P 500. That's pretty frothy number. It was a big burst of energy up to those levels from here, from 60 to 90 in just a short period of time. Then you look down at the 50-period moving average here, 83% of the stocks are above that. Sometimes when we both get to these extreme levels, you can see these blue vertical lines, you see pullbacks take place in the market as well. Here's something I don't show too often because I like to use it to find market bottoms along with the Pring bottom fisher. This is the Nasdaq Cohen high-low index. And I just want to point out that it's pushing very high levels. This is looking back to all the way to 2014. And you can see sometimes when it reaches high levels, we can see pullbacks in the market. You got the stochastics in overbought territory. You got all-time highs in the Nasdaq. Now, what's really cool is when it drops to these low levels, that's really good at finding market bottoms. You can see when it came down here, boom, that was just spot on to the market bottom, boom, down here, spot on to the market bottom, boom, down here, spot on to that little market bottom. So this is going to be good if we start seeing a market decline at rapid pace, because if we hit these low levels and mix it with the Pring bottom fisher, we can really kind of hone in on a market bottom And then we have the NYSE. This is the McClellan Summation Index, but we're looking at the fast stochastics, and that's maxed over bought right there. We have the signal line kind of just 87.94, and then we have, sorry, I think this is the signal line, up at 100, just jammed up. Sometimes when we reach these jammed up levels, just max over bought, that's when we can see some pretty dramatic moves in the market, okay? So we got to be very careful when they're at these specific levels. Commodities. Let's look at gold, silver, and Bitcoin. First off, gold. This is interesting to me, okay? I'm going to come back around to the dollar here because the dollar's been kind of sinking and gold has been going down with it, which is very interesting to me. Typically, when you see the dollar go down, you can see gold rise. It formed somewhat of a hammer candle here, okay? It's below the 200 period moving average. The RSI is moving into oversold territory. Stochastics oversold as well. Falling wedge is a bullish type of pattern. So maybe we're just seeing a little bit of a market bottom here, and then we might start moving higher. But we got to keep in mind that we still have the potential to head lower. If we fall down even lower to 1750, I'll probably be picking up some more gold at that level. So just I want to call out, we're at a very interesting area of support right around here. We're in oversold territory. Maybe we might start seeing a reversal, or it could be potentially, if we start seeing it move up, we got to be careful because it might be a dead cat bounce. So we got to be very careful there. Here we are for the silver. We're at the lower portion of this trend line. It was closing below it, and then it happened to jam up and close back within this ascending triangle pattern. Hammer candle formed on a downwards action sometimes could mean that we potentially might start seeing a bounce from this point. But we got to get above 23 to really confirm that. And then we still have the 50 period moving average sloping downward, so that's going to act as an area of resistance as well. MACD is really sloping down right now, so it's pretty bearish context right now. But we still have the 200 period moving average below us. Maybe we might break down, false breakout, build a base down by the 200, and then potentially move higher from that point. We've got to keep an eye on it. Here's Bitcoin on the weekly time frame. Bitcoin's just ramping to all-time highs. I think today we actually made an all-time high in Bitcoin, so good stuff for all the Bitcoiners out there. We have just a parabolic move to the upside. Yeah, it doesn't get much frothier than this right here. So we're jamming up to 85 pretty much on the RSI. Last time it was at these levels was really back here at the all-time high. That it reached a high of 90, and that's when we saw it really kind of sink off. We did have a week or a day that we did see some really big pullback action. Let me pull that up actually on the daily time frame. It was these couple of days right here, just a massive drop down, in a very short period of time. Came down as low as 16,250 from a high of, 19,250. So we kind of knew that though. We said when things get oversold or overbought, they can stay up there for a while, but it's likely to see strong volatile movements when we start, to the downside when we get those levels. And that was that strong volatile movement. Now what I want to call out here is we're building another all-time high on a negative divergence. So, keep that in mind where people are getting super stoked about this move. Maybe this might trap in more people and burst even higher. But then you just take into context where we are on the RSI, where we're at on the weekly time frame RSI, and these negative divergences taking place. So probably now, not the best time to go long. Typically what you want is to find pullbacks. I thought 14,000, 15,000, that range could be a potentially good pullback opportunity, but we'll see how that kind of plays out. Let's look at the dollar. This is why I wanted to point out on the dollar when I was talking on the gold section. Also a bullish pattern here. Interesting, right? Falling wedge. We have a hammer candle at the bottom portion of it. This is literally like gold. But now we're below 92 still. So we got to be very careful here because we might start breaking out, which can push gold potentially lower. So bullish pattern here, but we did break down through a major area of support, support. So now that support can become resistance. Yeah, it's a hold there for a few more days to really confirm that. But we'll take note for what it is. We have a bullish pattern in gold. We have a bullish pattern, short-term bullish pattern in the dollar as well. So yeah, overall context still bearish. So we'll see, like I said, how this one kind of unfolds for us. Quickly look at yields. Not much going on in yields. Like I said, we're tracking this spread right here. Spread's been increasing, but then we saw a break through this rising wedge, and now it's holding about 1.22. This is the 30 minus the 5, and this run right here is the 10 minus 2, which is more widely tracked. Look at, we're still trending up since August, okay? We didn't break through this trend, so we got to honor this trend. It's struggling around these areas. Like you got to see like 0.7, 0.8. This spread gets a little caught up in those areas. So maybe we might break through higher to the upside, or we got to watch out for a breakdown. Here's the 30-year. You can see that it broke down. And then we can see right here the 10-year is still holding strong on the trend line. And then below us we have the 5-year and then the 2-year. The 2-year is jam low. This one really follows the Fed fund rate. So this ain't going anywhere apparently till 2023, where they kind of held, decided to hold rates to near zero or zero till that date. All right, let's wrap it up. Let's wrap it up because I went over so much. Okay, overall, what I'm seeing here on like the daily patterns, the 2-hour patterns, the short term. Let me pull up actually one of those charts. Just I'll pull it up on the S&P 500. Let's do that so I can show you a lot of bullish type patterns. Okay, in bullish context. Okay, you got the 2-hour here. It's looking pretty bullish. We might break out to all-time highs. But what I want to kind of conclude with is to make sure that everyone understands where we stand on the signal charts. I didn't even go over the VIX. Darn it. I didn't go over the VIX today. The VIX is in a falling wedge as well. I apologize for that. Maybe I'll just post it on my website and go over it then. But it's in a falling wedge. It's closing a gap that's been around since February, okay? So this is important actually. So I'm sorry that I didn't post the chart, but where the VIX stands right now is exactly where it stood before the February crash took place. We're at the same level, right around there. The gap itself has not been fully filled that created it, but it's just a certain level that we need to pay attention to. The pattern is a falling wedge, and it's very possible that if we break out to the upside on the VIX, we're going to see potentially what Jimmy Uncle calls Volmageddon. Volmageddon is where volatility really picks up pace, and we can see some very sharp movements to the downside. Now, we have the Fed coming out and talking pretty much a couple of days this week, Tuesday and Wednesday, all right? They're not going to say anything bad, really, okay? They're going to do whatever they can to, put a backstop to any market falling over. And then after that, though, we're pretty much free until mid-December, I believe it is, when I think it's I forget which meeting it is. Could be a FOMC meeting when or potentially talking with the Treasury Secretary. I can't remember, so don't quote me, but in mid-February or mid-December, is when that meeting will take place. So we have a solid 2 weeks after Wednesday really for the bears to grab hold of what's going on. So we might see a sharp decline. It's very possible given the signal charts are very, very overextended. Some of the patterns that we see in the Dow Jones comparatively to the 1987, it looks very similar, but that doesn't mean anything, okay? It really doesn't, but we just need to take note of it given the current circumstances that we're living in, okay? Record printing, just massive moves to the upside. A lot of people are starting to believe this is just the new normal for some reason. It's not always like that and never has been like that. So, there's a lot of confusion out there, but big moves like this to the upside, creating all-time highs, just gap. Hello, that's not normal. And I'll be honest, I think it was 70% or 70 to 80% of all gaps get filled. All right, 70 to 80%. And we're starting to see gaps every single day to the upside. So put all that into context, okay? Put it all into context. Understand. On next market brief, I'm going to be bringing in actually the value line index. Value line index is comprised of a lot of stocks, okay, in this index. And what it really helps us tell is when we see big rallies like in the Dow and the SPX, is it being supported by the value line index? And what I can tell you right now is the value line index is struggling to make these all-time highs, or it's right around there. And you see that the S&P 500, the Dow, and everything else is really just pumping away to these all-time highs. So what's interesting to me is that divergence taking place, and it's not supported by the broader market, okay? So it's very, very important that we're paying attention to these signals, paying attention to where we stand. Don't let euphoria, don't let emotion get in the way. The bubbles pop, but before they start seeing sharp declines, you see mass euphoria, okay? This is typically the later stages of a bear market, of a bull market. You have the very smart people at the beginning that get in before everything is known, and then toward the end, that's when all kind of the stupid money pours in and pushes up to all these all-time new level highs and keep on going. Nothing could go wrong. Euphoria builds, and before you know it, it traps in as many people as it possibly can. So we need to be very diligent with having stop losses, honoring our stop losses, and just managing our money as time goes. So you can capture trades to the upside. Just make sure that you're capturing those trades, okay? Don't feel so confident. What this does is, let me show you. What this does here right now, this movement to the upside, let me walk you through, okay? And then I'm going to just close it out. Imagine, Joe Schmo bought some call options on Robinhood or Webull or whatever, and bought some call options, okay? Boom, he just saw these big gap ups and woke up the next day and had 100% gain on his call option, a short-term call option. He's like, oh my gosh, that was so easy. And then he did it again, and then he did it again. He just turned $500. Now he has $10,000. And he's like, dude, I can actually take this and turn it into $100,000. I'm pretty smart. So I'm going to keep doing it and keep doing it. And I'm going to keep doing it and keep going. And then, I'm going to pay a little bit more caution. But, I think that I can make it bigger and I can grow this portfolio. Well, typically what happens is people become so confident that they know what's taking place and they become used to it that they think they can lever up a little bit more and potentially a little bit more. And if you think that I'm lying, just look at the 2008 financial crisis. Look at the housing market. People thought they can buy and afford a bigger house and a bigger boat and a nicer refinance or remodel, and a new landscape and a new furniture, a new everything. And they keep on leveraging up and they keep on feeling more and more confident. And then it sucks everybody in and then boom, there it happens, right? So be very, very careful. This is very real, okay? Gap. Looks bullish for the most part. Euphoria is at its all-time highest. Very complacent market. Be very careful, okay? You can capture more moves to the upside because it can go a lot higher from here. But also, you need to be very, very careful when it falls because it can happen overnight. All right, that's all I got for you on today's Stock Market Brief. I will see you next month. Woo!